Welcome to the Future of Sharing. It's the new series where we're going to be exploring how can we make the sharing economy work for everyone. I'm Pete Leiden, I'm the founder of Reinvent, and today we've got a really special guest, Doug Rushkoff, who is the author of the new book, Throwing Rocks at the Google Bus, How Growth Became the Enemy of Prosperity. Doug has been on these before with us. It's always fun to talk to you, Doug. Thanks for being with us.
Hey, good to be with you.
So tell us, just to orient people who haven't read the book, what's the kind of premise that you're kind of wrestling with in this book, and just the general one without pertaining necessarily to the sharing economy? We'll get into that in a minute.
Well, most easily that the digital economy is really just the industrial economy on steroids. Rather than imagining new paths for value creation and exchange, what we're doing is taking the very traditional corporate capitalist extractive model of company growth and applying it to the digital sphere. So the danger with that is, as startups attempt to become unicorns, they abandon all notions of sustainable business. And I don't even mean sustainable business like being green and good for the planet. I mean actually having marketplaces that can sustain a business for the long term. Rather, they look at how to dominate a marketplace completely, even if that means killing it, in order to establish monopoly on a vertical and then leverage that to pivot into another vertical, and so on and so on. So it's this, what I'm complaining about in the book is that they're taking really the Walmart strategy of going into a region, undercutting all the local sellers, extracting all the money from that region until the region is bankrupt, then closing shop and moving on to the next one. That's what I see the Ubers and Amazons doing, rather than seizing upon the more distributive nature of digital technologies to promote the velocity of transactions and the velocity of currency rather than its extraction. So I'm really just looking at, a 75-year-old problem of corporate profit getting smaller as corporate size gets larger, and seeing how that process has been accelerated and exacerbated by digital technology, where digital technology could actually be part of the cure.
So when you talk about a digital economy, give us a sense of the scope you're talking about. I mean, everything from Google, Amazon, anything digital, or is it even just traditional companies using digital kind of mediums, or what do you mean by that exactly?
Well, I'm a media theorist, so I look at media and technological revolutions maybe a little bit differently than most. So I think that what we've done is moved from a television media environment to a digital media environment. So while on the one hand that means, yeah, instead of watching so much TV, we're watching video on digital devices. On a larger scale, it means we've moved from a globalist and in some ways very connected and simultaneous global reality. The Olympics being broadcast by satellite, or Neil Armstrong touching his foot down on the moon, or Ronald Reagan saying, "Mr. Gorbachev, tear down this wall." Those are all very television moments of a television media environment. The global economy is television era. In the digital era, we end up with things that are actually much more discrete, much more local. Arab Spring. Instead of Ronald Reagan tearing down this wall, we get Donald Trump saying we want to build a wall. And we get surveillance and affinity groups and these very tight filter bubbles of the way we get our information is not as part of the great human collective, but as the individualized feed of each person. So we're also looking at business move from that broadcast television globalist environment that was very friendly to giant global corporations, the Cokes and Pepsis and Exxons, to a digital media environment, which over time will actually be more friendly to highly individualized businesses, local companies, community-supported agriculture, there's craft beers and Etsy and smaller things. So the scale actually changes on a profound level. So that's sort of the broad brushstroke way of looking at this transition from a corporate economy to one where I believe we start to retrieve the economic mechanisms that we left behind in the last great renaissance. We retrieve peer-to-peer economics, local currencies, crafts, and we see it in that kind of Burning Man, Etsy, craft beer, microbrewery sort of culture. On the one hand, we want to laugh at the heirloom tomatoes and zucchini, but on the other hand, if we look at it in terms of larger historical sweeps, you see, oh, that actually makes sense, given that we're shifting, given that this other thing is actually happening.
So what you were talking about recently, what you just were talking about, is more the vision of what this could become, how these technologies could play out, how you could get to it, not the critique. The critique is kind of bottling that up or kind of stopping the pathways towards that. Is that the way to think about it?
And the reason why people are throwing rocks at the Google bus is because the companies that seem to promise this increased democratization have actually done the reverse. Google were the good guys, the two kids in their Stanford dorm room who came up with the little algorithm that was going to take down Yahoo. And instead of having Yahoo and a giant shareholder-driven company organizing the net's information for us and deciding what was going to come up on a search term, they were going to use a little algorithm to use our links and to use the democratized process to figure out who's going to link to what and what's going to come up in a search box that can't be fixed from above. And instead, what we got is a giant holding company called Alphabet. We've got people who can't live in San Francisco anymore because the economy's been so tilted that rents have tripled. If you're near a Google bus stop, your rent is 30% more than it is if you're, beyond walking distance from one of them. And people look at it and realize, wait a minute, the promise of the digital economy has not been realized. If a company like Twitter can make $500 million a quarter and still be considered an abject failure by Wall Street, then there's a problem with this.
Fascinating. So, okay, so the ultimate promise of the digital technologies, you're not necessarily giving up on. You're saying, but right now you're saying it's gummed up in this kind of maybe in a positive way. We're still in a transition to it, or it's being stopped, or it's being gummed up in some way.
Gummed up because young founders in particular don't realize that there's an operating system beneath the platforms that they're building. If you are truly a disruptive person, if you have a disruptive company, then you don't run to Wall Street and ask them to ring the bell on the morning of your IPO. When the guys in suits on the stock exchange are applauding for you, it's not because you've done something disruptive. It's because you've confirmed the primacy of the biggest, baddest industry on the block, which is financialization. So the problem is that young founders don't realize that taking that VC money comes with a price, that they're going to be forced to pivot away from the sustainable enterprise, from the great idea they had, and towards instead more of a flip this house approach towards their business. The object of the VC is not to build a company. The object of the VC is to flip the company for 100x or 1,000x of their original investment. And that's a very different short-term strategy. And most young developers don't quite get that until they've had to flip a couple of companies. And then they're forced to make the decision, do I want to build a company that I want to run, or do I want to just build a company that I'm going to sell?
Fascinating. So you're not giving up necessarily. You're pointing out this problem, but you're not necessarily giving up on how this could get solved. And one of the ways, so from the internally, from the company's perspective, I know you've been doing some thinking on kind of ways you could actually think differently about this that wouldn't necessarily, anyhow, that you could kind of mitigate these excesses or kind of transition in a different way. Can you give an example or two of that? of how,
Yeah, I mean, the easy ones are, what we're now calling establishing a platform cooperative. What if Uber's drivers owned half the company instead of none of it? Then instead of simply doing the R&D for the robotic cars that are going to put them out of work, now they're doing R&D for the robotic cars that they will own. It's not unreasonable. It's actually quite reasonable to have the users of your platform be co-owners in that platform. Another way to think about it is, the little mantra that I've been giving most digital companies is make them rich. How do you make your customers, your users rich? Rather than seeing them as people and communities from which to extract value, think of them as partners who you want to make more prosperous. The more prosperous your users are, the more money they will have to spend with you. So instead of looking at the big book industry, say, the way Amazon does, as something to extract all the value from, who cares if the authors and the publishers are going broke? Instead, if they looked at it as a marketplace to promote, that we want to help these people actually make money. If YouTube looked at its video makers as people they wanted to make rich, rather than just people on whose videos they wanted to run ads, all of a sudden the equation changes. Another way of looking at it is to think about your market as bounded rather than infinite. The internet tends to make us think almost generically of the market. Everything is global, is universal. If you start thinking of your market as more bounded, then you can start to see how money circulates. You can optimize your business for the circulation, for the velocity of money, rather than for the extraction of capital. And you get out of the problem that Coke and Pepsi and Exxon and Chevron have, where they extracted all the money off the table and they have no more productive assets. They can't put their money to work. That's, talk to any CEO of a Fortune 100 company. They're sitting on cash that they can't spend, and because they don't have muscle. It's almost a kind of corporate obesity where they store the money in fat but don't have any ability to deploy that capital. So they become holding companies, which is basically becoming a bank. So yeah, and in the book I outline them all, really specifically, but there's many ways to begin thinking about really money as a verb, a value as something that keeps happening, rather than thinking of currency as just capital to retain.
Interesting. So now this project we're working on now is looking specifically at the sharing economy. Now you've been talking about capitalism, corporate capitalism, digital economy, which includes you did mention Amazon and Google and others that wouldn't probably be considered in the sharing economy. How do you think about the sharing economy, or how do you in light of the way you're discussing it now? I mean, you mentioned Uber, but I'm just saying, think about it in the general. You mentioned Etsy too, though, and so maybe when you think about the sharing economy, is there any differentiation or any kind of different way to think about that, or any more positive things in there or negative things to differentiate it a little bit for me?
Well, the sharing economy would be really interesting to see happen. Right now we don't have a sharing economy because the platforms that people are using to transact are long distance corporate owned monopolies. So if a town enacted sharing between the people in that town, that would be a beautiful thing. But if a corporation 2,000 or 3,000 miles away is building a platform to enable people in some town to share stuff with each other, then you have a problem, because the platform is tempted, as most are now, to extract the lion's share of the value. So they end up really just leveraging the sharer's capital, the sharer's time, the sharer's labor, and the sharer's locality in order to feed their capital. It ends up being an extractive process rather than a generative one. The only company of the giant ones that really kind of got it right was, and maybe it's because they came in too early to know how to do it wrong, was eBay. I'm still, maybe I'm not supposed to be, I don't know if it's hip or not anymore, but I'm still a fan of eBay, for however corporate and big and extractive and Meg Whitman and all these people we're not supposed to like, I guess, if we're leftists. eBay it created a market opportunity for people rather than taking over one away from people. It actually gave people a way to create value for the stuff they had in their attic or for junk collecting and doing activities that didn't exist before, and they didn't take a huge amount of the money given the marketplace that they created. The newer so-called sharing economic platforms are really just looking for low-hanging fruit. They're looking for inefficient businesses and inefficient markets out there. The same way that Amazon chose the book industry, because the book industry was such an inefficient marketplace. They find low-hanging fruit and replace it with, you know, more extractive platforms that simply externalize the things that the current platforms can't. So Uber can externalize all of the things that a taxi commission can't externalize, such as its impact on the town and the impact on labor, the impact on pollution. Are we going to accept handicapped people? You know, Airbnb can externalize all of the things that a regulated hotel industry can't. You know, handicapped entrance and sanitary conditions and all the kinds of things that you need if you're going to be a public facility, that, you know, and or even discrimination. You know, these are things that the platforms don't have to deal with. So they're busy disrupting these marketplaces because they share really two unfair advantages. One is they have these tremendous war chests of capital through which they can undercut existing businesses without actually being profitable. And second, they can externalize all of the social costs that regulated industries aren't allowed to externalize because it doesn't benefit the public. You know, it's really the easy way to see it is, from a traditional economic lens, is that the three factors of production have always been known are land, labor, and capital. And that, you know, as Adam Smith even understood, you need all three of these to have business. What the sharing economy platforms are able to do is to create artificial situations where capital is acknowledged. The VC has a voice at the table, but land, the municipality where these things are happening, they don't have a voice at the table. It's just, you know, over there somewhere. The mayor, the town council, they're not involved because these are generic, giant, long-distance corporations, and labor is not taken into account either. You know, either the labor sector that would be working for hotels, or the taxi drivers who have medallions and who have families to feed, who really can't survive at Walmart wages. The reason why people take Walmart wages is because there's no other employment there, and that other employment has been disrupted, you know, by these so-called sharing businesses.
Okay, so let's walk through this. Let's break that down, because you put a lot out there, and this is kind of what this project is about. You've kind of touched on a bunch of themes. So let's start with the beginning, which is, because I know you've been a proponent of peer-to-peer, you know, networks and sharing. So take the general premise of a sharing. You seem to be thinking is a good idea, and so someone wants to rent out a room to them, you know, somebody.
That's not sharing economy. Sharing economy is, why does everyone on the block need to have his own lawnmower?
Yeah, exactly.
We could actually have one, let's say 2 lawnmowers on our block. Now, that in traditional growth-based corporate extractive economics, that's a bad thing. The reason why it's a bad thing is if we only buy 2 lawnmowers instead of 20, what happens to the lawnmower company? What happens to the jobs of the people who are in that lawnmower company? And you start to move in a kind of ass backwards way from the artifacts of industrial culture back to reality. You know, the fact is, what if we don't need so many people making lawnmowers in order for everybody's lawns to be mowed? What then? You know, what do we do with those people who no longer work at the lawnmower company? Are they still allowed to participate in the spoils of capitalism? Can they still have food? Can they still have houses? You know, what the sharing economy does is makes us see that we have more than enough stuff to go around. And what's happening now is that the reason to have a job is not to make the stuff we need. The reason to have a job is to have justification to share in the stuff we already have. But because we don't have enough jobs for all the stuff we have, we get rid of stuff. We tear down houses in California because we can't let people live in them for free because they don't have a job. We burn food every week in America because we can't let people have it or the market price on food will go down. So we are reverse engineering our economic reality based on an industrial model that was born in the 12th and 13th century on very different economic conditions. So the sharing economy would portend the end of extractive corporate capitalism as we know it. Because if we turn out to have more than enough stuff to go around, if we only need people working 2 or 3 days a week, if we start closing factories because we don't need as much stuff, that's a big problem for capital. What do we do with all the money? Where do we put it? Where do we invest it? So that's what we have to unwind.
Totally fascinating. Yeah. Okay. So the goal or the idea is actually kind of a noble one at some level. Okay, so the next piece, I guess, is what we're trying to figure out is there are levers to pull. We talked a little bit about what the companies themselves involved in this could do internally to kind of make their impact differently or take less extraction or think differently about the long term. Anyhow, we talked a little bit about that, but there's 2 other pieces here that you mentioned about what cities could do and also the workers. So let's, if we were to build a system that worked for everyone, a sharing economy essentially that worked for everyone, what are the kinds of, have you thought about what are the kind of things like a city would have to do? So one seems like you're talking about, for example, these regulations that worked for the taxi era, hotel era, frankly were evolved over many years, those health and safety things. It seems like we could upgrade those regulations. We could kind of rethink them going forward. Or you tell me, what do you think about that kind of the situation of a city now facing this different kind of future?
Well, the Elon Musks and others out there see regulation as some sort of communism, where they don't realize that they just want different regulations, not no regulations. They want regulations that protect them rather than regulations that protect people and places. I mean, I get that. And it's because they want to grow. They have debt structures to pay back. I mean, I get that. What are you going to do if you've got those people breathing down your neck? So it's not evil as much as desperation on their part. I'm not asking for even regulations so much as people and places having a seat at the table. The city should be a shareholder in a company that's using its infrastructure to run itself. It's a shareholder. It goes to the board meetings. It's actually part of the company. So it's right now shareholders are only the people who've invested cash. And I think we've got to get our head around the fact that no, the people investing labor, the people investing infrastructure are also part of that. They're part of that discussion. So if the Lower East Side of New York is being utterly changed by the presence of Airbnb, then the municipality of the Lower East Side of New York should be at the table. They should be there. Because what's the purpose? What's the purpose of the company after all? Is the purpose to deliver capital back to investors, or is there a multiple purpose? Is it to serve labor, to serve customers, to serve municipalities? Rather than right now, there's enmity between those camps, and it's really because we're no longer acknowledging that these companies are all require collaboration between these and cooperation between these different parties with different that are incentivized differently.
Mm-hmm. Well, but I totally get that, and I think you're right. So there's a stakeholder piece at the table, but at the table, then my sense is you're looking forward. You'd say, well, there's taking these new kinds of companies and putting them in the taxi and hotel world. in those regulations is probably not the way to go, but to have the same kind of values you're trying to preserve, health, safety, various things like that, in a new kind of context. Do you feel that there's some kind of upgrading that needs to happen across the board, or are you kind of, because you talk about this imbalance between some are in these regulations,
I
some
believe
aren't.
the participation of people and places in the way these platforms operate is almost impossible, given that the platforms seek to establish absolute monopolies over their verticals. That's the real shame here. You can't really be everything to everyone. You can't be the world's thing, and that because it's that generic scale that ends up abstracting the business's impact on the world. It's just as the United States can't be the world government, Airbnb can't be the world's hotel and Uber can't be the world's taxi. It doesn't work that way. It would be much easier for Airbnb or Uber to give the technological capabilities for cross compatibility between the town sharing or house sharing plans of different places. But New York should have its own house sharing system that happens here, that's homegrown here. The Jersey Shore should have its system, and it's not that hard to say, oh, well, rather than being the system, we're going to be the great technology provider so that there's cross, so that, okay, each little place, and you know how to find it, maybe they even do have one big centralized place where you can go to find those different regions, but you don't use the same tool for every single community in every single way. Because what that's doing is, I mean, even if you want to look at it in terms of style, to the tourism industry, it's creating the same thing everywhere, and that's why travel at that point. I mean, it's already to the point, why go to foreign cities? Because they all have the same stores in them anyway. So now I get Airbnb, I'm going to pick which one, it doesn't matter which one I go to.
Well, except, but if you go to this Marriott is a Marriott, or Hyatt is a Hyatt. I mean, there is something about, for sure, the homogenization of hotels. I mean, in some ways, though, I get what you're saying on the meta level, but that also opens up these unique little houses and unique places, and in some ways, it is trying to localize and particularize, and
it is, and it could. And if people weren't in a position where they were really forced to rent out their homes and move in with their moms, in order to get by, these are most people who resort to using these platforms are not doing it because they really want people in their homes. We know all the numbers have been rigged by the sharing economy companies to make them look more like they're one thing when they're actually another. But the people who resort to these odd jobs, the driver who resorts to a lower paying taxi job is not doing it by choice. The people who are renting out their homes and living elsewhere are not doing it because that's what they prefer. They're doing it because they don't have a job, because it's their last gasp attempt to try to save their home. The impact on a apartment building of having half the units or even a quarter of the units become hotel rentals is devastating on the local community. And then that mushrooms, that perpetuates the sense of alienation people have from their own communities, the inability of people to actually form those bonds, because you don't know who those people are and you're less likely to talk to your neighbors. You're further disenfranchised and even more dependent on these ridiculous international generic platforms for, some money to go to Walmart to buy some stuff.
Well, okay. So we're talking about cities, and then let's look at labor a little bit different too, because that's the other piece you talked about there. Now, and we've been talking about a couple of these companies. Let's look to let's say Etsy is a good example. Clearly understood it as a sharing economy.
Not sharing. It's a peer-to-peer economy. I also don't understand why we're calling sharing. It's not a sharing economy. Couch surfing is sharing economy.
Okay, talk about that in your mind, the distinction, and how do you distinguish that?
I don't think people use money when they share.
Oh, okay, so that's a big difference then.
I think
Okay,
when people share, they share a thing. To me, at least, this is just the way I learned it, but I'm using the kindergarten definition that I got, I guess. Instead of, if I shared my phone with you, I'm not renting my phone to you. I'm sharing. Oh, you need to make a call. Here, make the call. And then you say, oh, I'll pay you for what the call costs. That's sweet. Okay, you can pay me for what the call costs. If I ask from you more money than it costs to make that call, then I haven't shared my phone with you. I've rented my phone to you or sold my phone to you. So I look at it that way.
okay.
But I do like Etsy as a peer-to-peer. As a peer-to-peer economic platform, a peer-to-peer market platform. I'm going to be interested to see, now that they've gone public, whether they can maintain their sort of peer-to-peer ethos, or if, like LendingTree and some of the others, they're going to get killed as they attempt to grow in order to satisfy shareholders. Shareholders don't want successful revenue-based businesses, because those translate into dividends, and dividends are taxed really high, and they don't want that. They want capital gain. So they want the company to grow. And in order for the company to grow at the rate that investors want, they need to monopolize and dominate markets and do things that aren't in the long-term health of the company or the markets that that company is serving. This is why CEOs, even of traditional companies, are weeping, and they weep with me, because they cannibalize. They need to sell off productive assets in order to create the illusion of growth for shareholders, because the CEOs have been incentivized to create growth in order to get their money. And that's an ass backwardness that we're going to have to fix. Now, I thought digital companies could avoid that because they don't need the same levels of capitalization in order to grow, because they're tiny. Uber and Airbnb, these are tiny little platforms that they have tremendous leverage, but they're tiny. But the mistake they made was they have all taken way too much investment. So now they need to answer to their debt structures rather than to their marketplaces. And that's where we're seeing the disconnect.
So really, you're returning again and again to the financialization, essentially, of the economy, and this, it really is
that's the operating system that these companies are running on. So yeah, Etsy, I'm so there for Etsy, and I love those guys. I know them, but they are going to have a problem that, say, Kickstarter is not going to have. Kickstarter is not going to have the problem because Yancey Strickler from the very beginning said, my investors, they're not going to get any votes. They're going to sign something right away at the beginning saying, you can't cash out, you can't sell your shares, you're going to have to sit and wait and be patient and maybe get some dividends someday. And so he's sitting pretty. He doesn't have to expand into other markets. He can do the thing the business does. He's much more like Luigi's Pizzeria. Luigi's Pizzeria makes money because I don't mean Luigi's in particular, any pizzeria. Yeah. It's the old style of business where you have the materials and the labor that you need to make your pizza, and then you sell your pizza for more than it cost you to make it and to rent the pizzeria, and that profit is your winnings. And then you use that profit to live and to invest in your kids' college. It works. It seems slower, but it's much, much more stable over time to have a revenue-based business. As opposed to a business that you sell to successive rungs of investors.
So the big swing change that would rebalance the whole system would be some more fundamental kind of reform at the kind of financialization of the market, or some kind of rework of that. Although
it's sort of simple. It's really for companies to take less money. Because what they do now is they take, and I understand why, they take a whole lot of money because they can use the war chest to undercut everyone else in the space and artificially disrupt the existing business. Walmart has so much money, they can go into a town and sell things below cost for the first year or two in order to put everyone else out of business. So that's what you can do with your taxi service or your rental service or whatever service you have, is you use the capital to undercut, establish your monopoly, then leverage that vertical to move into another one. So, you go into drone delivery or logistics or some other form. And that's it's short-sighted. So what I'm hoping is that by staying smaller and by actually leveraging some sharing economy principles, that smaller local companies can provide goods and services, um, even if more expensive in the short term. I mean, because they can't just lose money up front. They can make the case that purchasing from them will cost less in the long run, because you end up feeding into the circulatory economy rather than just watch the money leave.
So you mentioned Etsy. You like Etsy, and you mentioned Kickstarter. Are there other ones that you think are really doing the right thing, or blazing the new trail, or trying new ideas that are worth watching?
Yeah, Meetup is another one. I mean, I guess they're an old one, but Meetup's still around, still profiting a few $1 million a year, still growing and getting people together in face-to-face ways. And the problem is, the minute you get people together in an actual face-to-face way, it's very hard to take money from them because they're enjoying each other now. It's sort of the opposite of Facebook, which will want to keep you. Well, you can do anything you want as long as you have it on Facebook Live, as long as you know, you're posting pictures about it, as long as you're. So the companies that actually serve us in a genuine way are they're at a slight disadvantage in terms of value extraction, but they're at an advantage because by making people's lives better, they create customers that people actually want to customers that want to interact with the company long term. But no, there's lots of companies, and then there's companies in the real world. There's Winco, which is a Walmart competitor out west. That's a worker-owned version of Walmart, and it's beating Walmart everywhere where they're going head to head because they charge the same low prices, only they're paying their workers more, so they're not destroying the communities where they're operating. Or Publix supermarkets down in Florida. That's an employee-owned company. So its stability and its resilience is so much higher than when you've got these shareholders breathing down your neck.
I saw some reference you made to Chobani giving shares. What do you know about that? I didn't see that actually. What's
Chobani, I mean, is using the Rushkoff strategy of giving. I mean, so I started advising companies. I was out there saying, if you haven't had your IPO yet, set aside 10% of your shares for your employees when you have your IPO, based on how much they've contributed to the company. If it's a platform, then how much revenue have they generated? So whether it was eBay or Airbnb or any of these things, you give a share based on how much revenue you've generated for the platform. So Chobani gave 10%. They're having their IPO in the next couple of months. They gave 10% of their shares to the employees. So they've made some nice millionaires out of people who are making yogurt, or 100,000 heirs or something, but they're acknowledging the labor participation in the creation of and the growth of this big company.
Although that is a lot of these tech companies and sharing companies, the equity concept is one that's been one that's long been done in the tech world. But you're saying this is a different kind of way of thinking about that?
Yeah, well, Airbnb, I'm sure, is giving money to the programmers at Airbnb who are making the company. I'm sure they have options. The people who are renting out their apartments don't have options.
Oh, I see what you're saying. I see those folks. I got what you're saying. Right. Okay, so let's think. So let's. I know we've been covering a lot of ground here, but. So we've talked about what cities can do a little bit, what companies could do. What could just people do now? Outside of official government or outside of official within the companies, like you've talked about. I know you've made reference to cooperative platforms, alternative currencies. I mean, all kinds of different things. So talk to us about kind of other ways to kind of what is it? Rebalance
reclaim our local economies,
or however you want to explain that. Yeah,
and reclaim prosperity. I mean, it's pretty easy. Invest locally if you can. Who's running a business? Who needs to expand? How's that working? I mean, there's a lot of great models, and I've been trying to share as many of them as I can. Really simple things. Luigi's trying to expand his pizzeria. Rather than going to the bank for the $100,000 he needs, he can go to his community and crowdsource it. Take $100 from people and promise them $120 of pizza at the expanded restaurant. So people get 20% return on their money. Luigi gets to pay back in pizza. Everybody who's invested now is an advocate of the company. And the investment that you've made when you give $100 to this pizzeria in return for $120 of pizza, you've made your main street better. You've increased your tax base. You've made your real estate prices go up. You've helped your school district. So all of a sudden you're seeing the multiplier effect of your income rather than throwing your money into an S&P fund and contributing to a Filipino, mining company where little kids are losing their fingers. So it's easy stuff like that. It's joining a CSA. There's really simple ways to begin thinking about your local economy and your local economic development. Share with other people. Actually, do ring on your neighbor's doorbell and say, do we both need to have snow blowers here? Or can I use yours and you use my lawnmower? Create ways to actually cooperate. And it sounds socialist or something, I'm sure. It sounds really foreign, but the less lawnmowers we make, the less pollution we have. It's actually, we are at a point where things are dying. We lost a mouse. Did you hear? We lost the first mammal to global warming. Was a little mouse that lived on the islands of the Great Barrier Reef. That's the only place it lived. And because of the rising sea level, they all drowned.
I didn't hear that. No, I haven't heard that. That's true, huh?
First, I know. It looks like a little gerbil. It was really, I don't know if they were nice or not. They might bite for all I know. But it looked cute and benevolent or not. It was a sweet little mouse. And it's the first mammal that it that's officially, first mammalian death due to global warming that's been documented. Extinction.
Wow. So you're bringing up the sustainability piece. So in other words, sharing in the way you talk about it, or proto-sharing, or however we think about this, done properly, kind of along the lines you're talking about, is a good thing. You're kind of getting back to the long-term vision here, which is...
And that's where, I would see Airbnb's point. It's like, if there are empty apartments in different towns, why not let people stay in them rather than building some whole big concrete Hyatt, monolith? I get that. I do. But for the most part, we're not talking about people's empty apartments that happen to be empty. We're talking about a real social disruption. And so if I'm in New York, I wait for a yellow cab. I don't use an Uber. I do think that Uber can successfully what Uber should have done was just given their app to the New York Taxi Commission and said, if you use this, give us whatever it is, $250,000 a year to use our app, or $1 billion, whatever, to use our app, and it's going to make your taxi world better. That would have been great. They would have been a service provider rather than an ecosystem replacement.
Although I will just say, just to devil's advocate here, but is having the actual people driving cabs are not often owning those; they're leasing them, and they're getting, and the actual people making money on those are the cab, the companies, and the people working in the hotels aren't exactly making great money. It's like Mr. Hyatt or something, So there is an extractive thing going on in those environments as well,
yes,
right?
But if New York City Taxi Commission and Transportation Commission were to look and say, okay, we are now in the 10 to 20 year transition from this medallion taxi system to robot cars.
Yeah.
What's the cleanest way to get there? What's the least destructive way to get there? I don't know if this is it. I get that, the market wins, right? The market wins. Our market-based solutions are really cool, but I like market-based solutions in partnership with municipalities.
Okay, so some of the things you're talking about are very fundamental changes to the economy, fundamental changes to the kind of way things work in financial capitalism. Doable, and certainly not, but they're big swings. And so one of the things I thought I'd check in with you here is looking towards this longer term view of the evolution of financial capitalism, or the evolution of true sharing, or peer-to-peer economy, or however you want to think about it, which you see as a worthy goal. What are you thinking about in terms of the politics, current politics, of how receptive folks might be to that, or how any new thoughts on how, with the rise of Bernie and the Millennials and other folks, is this something that seems to be more attainable, or more kind of realistic in many ways than it might have been even 3 or 5 years ago?
Yeah, I mean, I love Bernie. You gotta love Bernie. The misperception I think that a lot of people are under, particularly in that kind of Bernie camp, is that an otherwise kind of righteous system has been corrupted by bad actors. You know, that Wall Street is corrupt, and that the economy is corrupt, and it's getting more corrupt, and that's why things are getting so bad. When actually, as I understand it, the system is working exactly as it was programmed to. This is doing what it was supposed to do. I've done the historical research. I know what happened in the 11th and 12th century, how the system was designed and by whom. It's an extractive economic system that works as long as you have an expanding economy that can go into new colonial regions and take their stuff and enslave the people. And it stops working when you don't have that. You know, Eisenhower understood this. He had Vannevar Bush and other technologists to say, look, we can't expand on the globe anymore, but maybe technology is going to create more surface area on human interaction, give us a new way to expand. That kind of worked to the point until we're up to here as well. You know, we're surveilled and online and always on, and we just, I can't take it anymore. So once that happens, it's time to have a soft landing, or as soft a landing as we can, as we can create. So I feel like there is the political will, really, since Obama, which wasn't expressed by Obama. Obama became a Goldman person, but then we had, the reaction of the Tea Party and Occupy into sort of the vacuum that was created by that campaign, of people on both sides of the political spectrum willing to say, wait a minute, this sort of large, whether it's large corporatism or large government, which are sort of the same thing, because you don't have a corporation without government, you don't have government now without corporations, that people willing to say, no, we want this back at a human scale, and they look right now, unfortunately, at digital technology as the enemy of those of us who want to return things to human scale, where digital technology is actually, in some ways, the key to returning things to the human scale because of the way digital can work, as a highly local, easy, low capitalized, value creative, distributed authentication potential network. But I'm deeply worried about our political future. I mean, I try to tell myself that a Donald Trump cannot become president of the United States, but a Donald Trump can become president of the United States, particularly now that people feel so disenfranchised. I mean, this is really the key. Land, labor, and capital are the factors of production. When you ignore the land, you get climate change to catastrophic proportions. When you ignore the labor, you get disenfranchised people to Trumpian proportions. This is what's happening. So if we can bring people and places back to the table, which is sort of what, it's what people want, but what, Bernie was not able to articulate that. He just said they're corrupt. They're the billionaires, the billionaires, the billionaires. Problem's not the billionaires. The problem is an operating system that's optimized for growth instead of flow. And if he had talked about it that way, people would understand it's not about redistributing the spoils of capitalism after the fact. It's about pre-distributing the means of production before the fact. which is in some ways what the Uber sharing Airbnb economy kind of almost sort of almost does, but not really, because it's still taking the lion's share of the money, and because it's trying to orchestrate this thing from tremendous centralized generic operating systems rather than sort of distributing an API and letting people rock with it.
Do you think there's but that last piece is really interesting. So do you think the industry itself, or the series of companies and organizations working within that kind of industry, the peer-to-peer economy, however you want to think about it, I get your caveat on the sharing piece. Is it possible, because there's a lot of idealism in there too, you know, it feels like to me, and you even seem to give some kind of credence to the founders who may have been duped into it or drawn into this system without really fully understanding it. But do you think there's some possibility there that it could self-correct or could evolve in a way that's actually quite healthy in the near term here?
It could. I mean, the thing that's dashed my hopes lately is the way that Facebook seems to have corralled the internet, you know, and that more and more independent publications and websites and all are surrendering to the behemoth and becoming Facebook publications even rather than their own things. You know, and when AOL at the beginning, people thought that AOL would own the internet with their walled garden. And those of us who were around back then, you know, you were at Wired and I was at Mondo, basically, we all knew that was crazy. That the internet was this much bigger thing, and that the real moment of shock that we were waiting for is, when is AOL gonna connect the spigot to the internet? We're gonna have to deal with all those AOL people in our Usenet groups and our IRCs. You know, that was the moment, and we still haven't quite recovered. But, you know, but the internet we knew was too big for that. I never would have believed that a single company, a website like Facebook, could become so big, so dominant, that the web itself would almost be website by website, surrendering the open web to a closed walled garden platform that uses algorithms to determine what you're going to see and not. So Facebook is the Facebook situation is the best way of judging what's going to happen. If they succeed in what they're doing, then I don't have that much hope. Then I think then the monopolists win and capitalism reasserts itself, only to an extent where they're at least going to have to give guaranteed minimum income to the impoverished, so that we have this giant welfare state and we end up with this awful bureaucratic socialism, you know, of the dot-com nightmare. And I say this oddly enough, I'm a leftist, but I want a free market. I want people to be able to be industrious and make money and do all that stuff. I don't want to have to resort to a two-tier welfare state. But you know, you talk to the people in San Francisco, and that's the way they're talking about it. Don't worry, there'll be guaranteed minimum income for all those poor people, you know, so that we could still live in these lofts in South of Market. And
yeah,
that's not a happy outcome.
No, that is not. Yeah, I hear what you're saying. But that brings up all kinds of automation and AI and things too, which is for another day. But okay, well, but I guess in the long run, my own feeling is, I think, you could easily see a scenario in which Facebook is just the latest AOL threat, and that clearly there's enough of the web outside, and that people morph out of it, and just like you can get in, you can go to something else. I mean, ultimately, I kind of see them close. I mean, it's obviously a lot bigger than AOL is, but it does feel similar to me in some respects, that the worries is potentially overblown. But
I'm hoping it is. I just am so weird because so many of these publications I go to, they're like, oh, don't worry, now we have to do our Facebook Live, you know, along with this interview, and or publications that are folding themselves in.
Yeah. No, there is that going on. That's unfortunate, but anyhow, so just to finish, now you did mention, I just was going to get your pulse a little bit on but one last thing about the Bernie thing, because I understand that Bernie wasn't hitting the notes that you're thinking, but the phenomena of the particularly young people, the millennials as they talk about them, mid-30s and down.
They are aware. They are becoming aware when they say the system is rigged. It's just an aggressive way of doing media theory. It's an aggressive way of saying, oh, the landscape itself is a social construction that is tilted in favor of people in powers other than myself. They're becoming aware that the landscape is a constructed mechanism. It's not a condition of nature. And that it was constructed to extract capital and deliver it to a few people. When 47 people own half the world's wealth, there's a problem here. And that as people understand that, they realize, wait a minute, this is not because they're working harder or doing more or being more profitable. It's because the landscape itself is favoring their activity.
So do you really?
That's the rage. That's what's behind the Bernie side. And in some ways, it's behind the Trump side. They're just not as smart. I mean, and they want, the healthy thing about the Trump side is that they're at the poker game. They see the one guy winning everything. They know they're cheating. They just want to throw the table up in the air. Just, man, they're just mad. But again, it's ripe for the internet age. What's the bias of digital technology? It's not toward broadcast, it's memory. That's what these machines are all made out of. Memory, memory, memory. So what are people doing? I mean, a lot of it's false memory, but make America great again. They're hearkening back to who were we? It's always going to be about memory in this next phase. And if you see that, you can start to see that's what Trump's appeal is, this false memory of the great white America. It's why I'm upset a little bit about Hamilton, even this musical that paints this slave owner as this self-made guy. It's sort of like the West Wing or something. It's giving rich white New York liberals this, reconstituted, racially integrated American history. There's no black characters in it. There's just black actors. It's a very big difference.
I hear you. So given though that those two pieces, and just to kind of wind up here, given that's powerful energy on both sides that you didn't see even 5 or 10 years ago maybe, doesn't that give you some kind of hope given how kind of transformative you're looking forward? I mean, that there is some big rejiggering happening or some kind of more fundamental transformation ahead of us here in the next 5, 10 years?
Yeah, I mean, it gives me hope that because we do need a rather radical shift in order to keep our little planet going, in order to keep our civilization intact. We've got to become a more resilient civilization. And it does give me some hope, even in the wake of the gay killing in Florida and all of the fearful reactions to this rehumanizing of our world. It does give me hope. I do think that there's a lot of people who get that we need to have fundamental change and are willing to rethink their values. There's a lot of founders out there who don't want to become a unicorn, who don't want to make $1 billion. They want to make some millions of dollars, and they really get that if they make 10 or 20 million dollars, that might be enough to somehow get by, and that's a very positive sign.
Great. Well, that's a great place to end. And as always, very interested to get into your head, really understanding, in this case, the larger digital economy, but also the sharing economy and some really ways forward, controversial and also quite positive. And
Thanks.
So,
we can make it. We can make it through if we do it together.
all right. And so that's ending up this final interview and the final part of this interview. And thank you for being with us.